Welcome to Slavic Voice. Our breaking news report today: a notable increase in Israeli real estate and business investment within the Czech Republic.
That's right, Victor. This trend is being reported by Amos Uzan, the CEO of ConBiz SRO, a Prague-based firm that assists Israeli investors. He has confirmed a strong rise in demand for both property acquisition and business setups.
In a recent interview with the Jewish News Syndicate, Usam provided some insight into the motivation. He's quoted as saying, "They feel safe in Prague, and they are happy to give back to the Czechs that like and support Israel so much."
This sentiment is rooted in a history of strong diplomatic and economic relations between the two nations. The Czech Republic is considered one of Israel's closest allies within the European Union, a relationship reinforced by joint programs like the Gesher Most Initiative for Applied Research and Development.
And to understand the context of these investments, let's look at the Czech real estate market data from 2025. It was a record-breaking year for commercial real estate, with investment volume hitting approximately 4.2 billion euros.
That's a crucial point, Victor. It's important for our listeners to understand that while this recent surge is newsworthy, Israeli investment in the Czech Republic is not a new phenomenon. Investors have been active in the market for over a decade, with specialized firms dedicated to facilitating these ventures.
Absolutely, and this cooperation isn't just limited to government initiatives. Numerous bilateral business and trade organizations are actively fostering connections, creating a robust framework for Israeli companies and individuals looking to invest in the Czech market.
That figure represents a staggering 155% year-on-year increase. However, it's crucial to note who's driving this growth. The market was overwhelmingly dominated by domestic Czech buyers, who accounted for 86% of the total investment volume. In the fourth quarter of 2025, that figure rose to 97%.
Shifting to the residential sector in Prague, the market in 2025 was characterized by strong demand and very limited supply. The average price for new apartments reached approximately 175,000 Czech koruna per square meter, with significant year-on-year price increases across the board.
This has led to a significant regional impact on affordability. The Czech Republic and Prague in particular now rank among the least affordable housing markets in Europe. This is attributed to factors like slow permitting processes and construction constraints, which limit new supply.
And what role do foreign buyers play in this market? Data shows they account for about 27% of new residential property purchases in Prague. These are often cash purchases for smaller apartments intended for rental purposes. So while Israeli investors have been active in the Czech market for over a decade, they're part of the smaller, niche segment of foreign buyers.
So, to recap, we have a confirmed report of rising interest from Israeli investors who cite feelings of safety and strong bilateral ties as key motivators.
And this is happening within the context of a record-setting but heavily domestic Czech real estate market that faces severe housing affordability challenges. That concludes our breaking news report for Slavic Voice. Thank you for joining us.